Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Okay, let's do a little chit-chatting. Somebody was asking me, there was a request for the video that I did in which Mike Maloney was talking about an opportunity for the largest transformation of wealth ever to happen in our history. And he explained how, in his opinion, it was going to happen. Well, I tried looking for that video and I couldn't find it, but I got like 7,650,000,000 videos. So it's really hard to track down. I decided I'll just go ahead and review the video again. And besides that, it's time to do so because I have a bunch of new subscribers and they can really learn a lot from this presentation by Mike Maloney. So we'll go ahead and we'll review it again. Some of you might have seen it already, but for those of you who are wondering how it is that people holding on to gold and silver are going to see the largest transformation of wealth ever, you're about to see how that's going to happen. But before we get started, please do me a favor and hit the like button. And if you're not a subscriber, please do so, because when you do, it helps out the channel and I surely do appreciate it. Speaking of gold and silver, right now is a good time to buy. Don't fall for the prices you see on the paper market as far as value of gold and silver. We know that's not the true value. And this video is going to point out a few things about that. So stock up while you can to protect yourself. I'm going to do a video later on explaining to you how it is that gold and silver is going to protect your IRAs, your 401ks, and your cryptocurrencies. Yep, I said it, your cryptocurrencies. Because all of those things are subject to bail-ins. We're going to go over in detail on how that works. It'll make you upset, but you'll enjoy the information. So do yourself a favor and go buy some gold and silver. And when you do, check out our friends over at Money Metals Exchange. The link will be down below in the description. If you are a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you will get a free half ounce of silver. Sounds like a bargain. When I'm talking to people, we're talking about where we are, not just as a nation, but as a world economically. You know, I say there's a lot of financial issues going on. I always hear people say, well, that's because of the RONA. And I said, no, even before the RONA got here, I was telling people about this in my videos long before that. And this is another person explaining that. Everyone must understand that the RONA is not the cause of this new financial crisis. It's a single ember that has blown into a magazine of exposed gunpowder called derivatives and debt. Another bailout like 2008 is criminal. It's time for Glass-Steagall and a national bank. Well, there won't be no bailouts like in 2008 because they passed a law forbidding bailouts from happening again. But in the language of that bill, they allowed what's called a bail-in. The funny thing is the difference between a bailout and a bail-in. It says a bailout is when the taxpayers pay for the mistakes made by our government and the bankers. So the bailout made the taxpayers liable for the debt. A bail-in says that taxpayers will no longer be responsible for bailing out banks. Instead, the investors will be responsible for saving their own bank. The problem is, in the language of the bail-in, if you have a deposit, whether it's an IRA accounts, 401ks, cryptocurrencies, savings, whatever you want to call it, a regular checking account, savings account, if you have it at any bank, they confiscate your money and guess what they turn you into? An investor. So in the bail-in, the debt of the bank is forgiven and the investors are liable for the debt. So yeah, you got to pay attention to the wording. So a quick peek at gold and silver shows that, look at silver's down below $25. They're going to continue to try to smash this, and I'm going to explain why here in a moment. Since the end of January, getting all the way up here to March 8th, silver and gold have been on a continuous climb as far as picking up value. Now you're seeing it smash down all over again. And why is that? That's a good question. I'll explain here in a minute. Meanwhile, silver is at $24.98. Gold was above $2,000 and is now back down to $1,928.50. This shouldn't prevent you from buying gold and silver. The premiums are still high on it. Same thing since the beginning of this year. So why are they smashing down gold and silver prices? Well, it's real simple. We got midterms coming up. That's one reason. You can't run around telling everybody, well, inflation was transitory and we have the best economic recovery in the history and I've made more jobs and blah, blah, blah. No, they're artificially pumping up the markets. This whole economy is a facade. You can't have an outstanding economy when you got everybody on lockdown. So, one of the biggest indicators that the economy is bad is when people start selling off their stocks, causing the stock market to go down, like such. So, you notice that the beginning of January of this year, the Dow Jones has been dropping. At the same time, gold and silver has been going up. See the correlation? But when the markets are manipulated, and they're holding down and smashing down the value of gold and silver. Why? Because it's a strong indication that the majority of people have no faith in this economy and that they're moving out of riskier stocks like the Dow Jones and other ones and moving into safe havens such as gold and silver. So what they do to keep you from noticing it, and if you're not paying attention, you won't notice it, the volatility has conditioned people into believing it's going to recover. So people go, no big deal. Then all of a sudden, over the next few days, there's a major drop. It's conditioning people to leave their money into riskier assets as the economy slowly tanks. See, if you look at it this way, you can see that it's been going down consistently since the beginning of the year. But since it goes up and down so much, people have conditioned themselves to stop paying attention to when it goes down because they think it's going to recover. And that's how you end up losing a lot of your money. So in this case, since about the beginning of the year, it's lost maybe, about 15% of its value. But when you're looking at these graphs, what you shouldn't be doing is watching the dips and the recoveries. You should look at the overall direction of the asset from its highest point to where it currently is, and you can see the direction it's going into. So you can see here since the end of January to March the 8th, gold and silver are both heading in an up direction while the Dow Jones is going down. That's an indicator that people are tightening their belts, getting out of risky assets, and getting into safe haven. This is just their attempt through a manipulated market to hold down the values of gold and silver. They don't want people to believe that we're having a financial crisis. They first blamed the RONA, now they're blaming Putin. There's a worldwide market crash that's going to happen. If you're not into gold and silver, you are going to be SOL. How can you become rich off gold and silver? This is Mike Maloney. This video was posted back in 2014. It's more relevant today than it was back then. He's going to show you where the opportunities are for you to participate in the largest transformation of wealth. Here we go.
To see sometime before the end of this decade is a huge deflationary crash, and then countries will print their way right into hyperinflation, because what will happen is they'll print and nothing will happen, and they'll print and nothing will happen, because as they print, people are still scared and they'll save that currency and they won't spend it. And
what's crazy is this video was posted in 2014. I'm not even sure when this lecture was. That was 8 years ago. And he was right. He said what's going to happen is governments are going to print money, and that's exactly what they did. And he said that isn't going to change anything. You can give people stimulus money. When we did a silver squeeze, what happened? People took their stimulus money and bought silver with it. They didn't go out and spend it on frivolous crap. This is a debt-based economy. What he said was going to happen, he was accurate.
They keep on printing, and in my book I wrote that, you know, like the U.S. government could do helicopter drops. They could refund all the tax that you've ever paid in your entire lifetime. Eventually there will come a time where people say, you know what, I've got enough saved up for retirement and I really deserve a new car, or I really deserve a new big screen TV. And when people start getting comfortable and that currency comes out into circulation and velocity picks up, you can have a hyperinflation without having to have the countries print their currencies into oblivion. And so how does this affect you, and what can you do about it? This is where the opportunity comes, I believe. I believe in a currency crisis, the people that are, there's going to be a wealth transfer. And for every 1,000 people that don't get prepared, the one person that does get prepared is going to reap rewards at a ratio of 1,000 to 1. There's going to be a wealth loss for the people that aren't prepared, and a wealth gain for the people that are prepared, and that it's just a transfer. There's going to be no currency necessarily changing hands, but what you're going to see is the value of currency plummet and the value of precious metals skyrocket. And that is a wealth transfer. And in the United States, there's nothing better that shows it than this graph. This is base money from 1918. The Federal Reserve doesn't supply data before that, all the way until 2 years ago. With QE3, this is up here now, and with the pullback in gold, this is down here. If you could take these lines back here, back to 1913, before the Federal Reserve, they converge. There was an equivalent amount of base money to gold at the Treasury. They expanded that, which was a lie, and then they had problems in the 30s, and there were bank runs. And they revalued gold in 1934 to 35 bucks an ounce, and the value of the gold at the Treasury once again equaled the value of all the paper currency, the base money in circulation.
He's saying that gold should equal the money in circulation. That's how you support the value of your currency. He's saying where your opportunity to make money is when it dips. If you look on a screen, see here, this gap, if you were buying into gold, you made money because it was brought up in value to catch up to the money supply. It stayed that way for a little while, and then we saw another gap form, and this one there was a bigger dip. So if you were smart enough to invest into gold back then when it was really cheap, then you benefited from when it shot way up to here. Now here we are again, the gap has gotten bigger. Gold started to catch up to the money supply, but then we ended up with quantitative easing and a serious manipulation of the gold and silver market, just like we're seeing now. He was saying quantitative easing, they printed so much money that we're about to see the largest transformation of wealth. Now, I've spoken about this before. I said the true value of gold and silver isn't going to be how much does it cost per ounce. We know it's worth way more than what the spot market's telling us. Its true value is its purchasing power. They printed tens of trillions of dollars for no reason whatsoever. They thought they can give the money away and it would kickstart the economy. This has been going on since 2008. It's 2022. Don't you think after a couple of years you would have figured this out? So people are not going out and spending their money. Instead, they're investing it. So what do? Manipulate the markets, lower the value. They want you to panic. They want you to take your money out and just have that money burn a hole in your wallet and then get you out there spending. If you're lying to the American people, telling everybody that we have a great economy, then that means you can't allow gold or silver to go up. So you manipulate the prices. You manipulate cryptocurrencies. You make it very volatile. So people who are investing in them, instead of savings, they panic and they turn around and do what? Well, they sell their cryptocurrencies at a loss, allows them to pick it up so they can manipulate the market even more. You get the money and you're like, well, I'll do something with it, spend it, whatever it is you do with it. They just keep hoping that you'll take the money out and spend it and not reinvest it into something else. And they're manipulating the gold and silver market as well. They don't want people saving. That's why the central bank digital currency is dangerous. They put an expiration on the currency, forcing you to spend it. This way you won't have a choice. The central bank digital currency will put you in perpetual enslavement. That's what they want. That's what they need. Coming back to this, the more money that's out there, they're going to be forced to do something about this. People around the world are starting to rise up and protest. We're seeing it for one reason or another. People are tired of the way the governments have been abusing their powers and the corruption that's going on. It's forcing them to bail out on this great reset plan. We're not out of the woods yet 100%, but it looks like whatever this thing was seems to be falling through the cracks. So all that money that they printed, this is back in 2014. Since he's done this video, this gap right here is much, much, much bigger. Because they didn't just print out like a trillion or more. Tens of trillions of dollars went out, I think it was. And so the gap's much bigger. Now you add the fact that all this money was printed and they're holding down gold and silver price so that people will believe that the economy is doing good and they hope get out there and spend money is what they're hoping. I know, sorry about rambling on, but I wanted you to understand what was going on.
And then we go through World War II, this big expansion for World War II, and North Korea and Vietnam and Johnson's Great Society in the 60s and the 70s. And gold became free trading August 15th of 71. And the will of the public and the free market bid the value of the gold at the Treasury up until it once again equaled the value of all the currency in circulation. The opportunity is the spread between these two. This was the amount of opportunity. And so back in the year 2000, it was the greatest, it's as great an opportunity as existed here in 1970. But now with this pullback and the expansion of the currency supply that we've seen with QE3, we have the greatest opportunity in history laid at your feet right now. I believe that the stocks are a good thing, but I also believe that everybody should have some...
You can see that little note down there. I thought that when I heard this, I thought that's what he was talking about. When he says stocks are a good opportunity, he's talking about miner stocks. You know, gold and silver mining companies, that's what he's talking about.
Real physical gold and silver. I don't give advice. I never tell people what to do. But what I do is I buy gold and silver, physical.
Physical. Notice how a lot of people keep saying physical? Not ETFs, not paper, gold and silver. You have to buy the gold and silver and physically keep it in your possession. There's an old saying that if you don't hold it, you don't own it. Now, there's some of you got a lot of money out there like, hey, Pimpy, I don't want to be keeping that kind of gold and silver in my house. That makes me feel uncomfortable. That's the great thing about Money Metals Exchange. They have segregated vaults. You can keep your gold and silver with them. They'll hold it for you. And unlike a lot of other places who combine their inventory that they sell with their customers' holdings, Money Metals has a whole separate vault specifically for their clients that they protect gold and silver for.
And so now, in a Kondratiev winter and in currency crisis, what happens is you wake up one day and the opportunity is gone. This is the Russian ruble from 1919 up until today, and there's these enormous revaluations. This is during the Russian Revolution, the revaluations of the currency. But look at the number of revaluations that they've had. And when you see the scale of these revaluations, it's just absolutely mind-boggling how much purchasing power the Russian government kept on stealing from their population. But what happens in a currency crisis, does anybody here, have they heard of long-term capital management? Okay, this was a hedge fund that blew up back in the late 90s, and it just about caused the entire world financial to melt down. We came within hours of everything freezing up and no credit cards working, not being able to get anything out of your bank account, everything being shut down. What happened was Alan Greenspan got a bunch of very smart people and the world's big banks all together to bail out this hedge fund, and everybody found out about it after the deal was put together. When Lehman Brothers melted down, did you find out about it before it happened, or did you find out about it after the Federal Reserve and the Secretary of the Treasury and everybody got together and came up with a solution, and it was already dissolved and other banks had Bear Stearns and Lehman Brothers? I mean, what happens is there's an emergency and a very few people keep it secret and they try and solve the problem. And then you wake up in the morning, problem solved. Well, what happens in a currency revaluation is there's an emergency going on behind the scenes. The public doesn't know about it. A few people get together in a room and they decide that the solution of the problem is to make gold, for instance, in this thing, the coming currency crisis. You might see gold go from where it is to, say, $8,000 an ounce, or $7,000, as Jim Rickards believes, or maybe $15,000 an ounce, like I think might happen.
Mind you, this is sometime around 2014, and they're talking about gold's value being somewhere between $10,000 and $15,000. We've printed out trillions of more dollars since then. So you can imagine if that's where they were projecting gold to be at per ounce back then. But it's more likely now $50,000 to $75,000 per ounce for gold, and they reset the ratio back to 15:1 or silver to gold. So that means the value of silver will shoot up as well.
That's what it requires for that base money to cover the currency supply again, is about 15 grand an ounce or higher. And so the revaluations can be blindingly quick, and they can add up to some mind-boggling figures. This is the Russian revaluations. If you went back to Peter the Great, when he established the gold Russian ruble, and then the revaluations that happened during the Russian Revolution, 10,000 to 1, 100 to 1. In other words, your old currency is no longer useful. You have to bring it into the government and exchange 100 Canadian dollars or American dollars or whatever for one of the new currency that the government is coming out with. And then 50,000 to 1. That's 3 revaluations in this short period during the Russian Revolution. Then 10 to 1, then 10 to 1, and then 1,000 to 1. And when you add all of these together, 1922, 23, 24, 47, 61, and 1998, this went along with the long-term capital management problem. This happened 1 year after the long-term capital management problem, and long-term capital management contributed to the Russian default that caused this currency crisis, where the Russians, they ended up with 0.1% of their purchasing power after this currency conversion. 1,000, you bring in 1,000 of your current Russian rubles that you thought were worth something when you went to bed that night. You get up the next morning, you got to bring them into the bank, and you get to trade those 1,000 for one of the new ones. And what that adds up to is the Russian ruble was devalued 5 quadrillion times over that time frame. This is the amount of theft that governments can perpetrate on their populations. So the opportunity sometimes comes in a bull market that progresses and then peaks, and then you go into a bear market. That's in a Kondratiev summer. In a Kondratiev winter, many times it's a currency crisis that requires an overnight lightning-fast revaluation, and the opportunity does not exist after that. I believe, though, that what will happen is you're going to see people, if gold did get revalued suddenly to $15,000 an ounce, the opportunity is gone there, but where is silver? So I think right after a revaluation, you would see people flooding into silver.
Oh, no, sirree, Bob, not for my subscribers. They already know ahead of time. I told you, silver is like the sporadic, hyperactive kid on sugar. It goes up really fast in value and comes down very fast in value. Gold moves very slowly up and moves down very slowly. Pay attention to the gold to silver ratio and trade your metals that way and accumulate more over time. This is how you build your wealth. Anyways, as you can see, he's saying that eventually the government gets to a point where all hell's breaking loose, and if they don't do something about the debt that they've racked up, it can cause a huge crash. And mind you, that most of the crashes we ever had were in our country. This is going to be a worldwide one. It was a planned event. There's no doubt about it. They want to move us into a new monetary system, which is this central bank digital currency. So your gold and silver is going to keep you free because it's going to be outside of the system. You're not going to have programmable money. People will get fed up of it and eventually do something about it. So make sure you position yourself to benefit from this. Hopefully you have gold and silver. Anyways, that's it for now, you guys. Do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I catch you later. I'm out.